Hi everybody, it's time for some technical analysis here at smallcapinvestor.com. I'm Jennifer Schonberger, and joining me on the phone is smallcapinvestor.com's technical analysis guru, Kevin Pendley. Kevin, what are some key support and resistance points for the Russell 2000 to keep in mind heading into this week's trading for both the long-term investor and the short-term investor?
Okay, well, this is an interesting week because both of those parameters come into play for both long-term and short-term players. We start out the week on a bad note because we made new bear market lows this morning for the Russell. Now, the Dow and S&P 500 have not done that yet, so that's an interesting little diversion between the capitalization indexes. On the Russell side of things, right near the low today, I'm looking at 458. Now, the low today was 460.33. 458 represents a 75% retracement of that entire 5-year-plus bull market run that we saw from 2002 to 2007. So I think that's a nice figure to watch. And if you get around 458 or so, markets tend to like to see how things react around what I call figure numbers, numbers that round off nicely. So you've got 458, which is the 75% retracement, and 450, not far below that. Now, the scary thing could come into play below 450. Sometimes when we get these big long-term moves that really take out a lot of the shorter-term support and resistance points that people watch, you hit what I call a vacuum. And I think we could come into a vacuum of support below 450 because the next key point I'm watching is down at 430. And you might wonder, well, what does 430 mean? 430 is a nice rounded off figure for a 50% decline off the all-time highs, which fits similar moves we've seen when we've had recessionary bear market moves. So it's astounding how often we see move of about 50% on major recessions. We saw that type of move in recessions from 1973 to 75, from 1981 and 1982, and again from 2000 and 2001. So it fits pretty well. It's a logical target in here if we can't turn the market around. Now, one thing to watch if you keep an eye on some of the bigger indexes is 8,000 in the Dow. We have not had a close below that. We had a pretty strong rally off the dip below 8,000 back on October 10th when it took place. So that's another thing to keep in mind here as we trade through this week.
Kevin, I've got a follow-up for you. Just want to interject here. You mentioned the diversion between the Dow and the Russell. Now, I noticed the Russell has been lagging the Dow. Any indication on why that's the case?
Yeah, I think investors gave up on risk. We've seen massive calls for redemptions that have fueled the decline in the overall stock market. People that are in hedge funds, people that are in 401ks are saying, get me out of this. I can't take it anymore. Just put me in cash. Okay, and as that appetite or non-appetite for risk comes into play, well, small caps are a riskier type of investment, than say one of the Dow Big 30 companies. So as that mentality has taken over the marketplace, we've seen an amazing collapse in the spread. Just about 3 or 4 weeks ago, there was a double-digit spread between the difference for the year between the Russell and the Dow. The Dow was down like 12%. The Russell was only down 2%. And we've completely collapsed that. Now the Russell is down more for the year. And another thing I wanted to get back to, we talked about support points in here this week. If we can stabilize the market, and there's a decent chance in here, as we mentioned, we haven't made new lows yet for the Dow and S&P 500. The key upside points I'm watching, 500 on the upside, nice round figure. I call that a swing line right now between momentum for the high and low side of the market. And then above that, 550. You notice when we bounced off those lows October 10th, 550 was pretty much the ceiling on where the market stalled out in there. So those are the two key upside points I'll watch as we trade through the week.
All right, Kevin, we'll leave it there. Thanks for your insights. And we'll keep looking for those resistance points throughout the week. Check out Kevin Pendley's market articles for continuous updates on technical analysis.